All right, let's talk assumptions and VA loans and some of the risks that are associated with them. So if you're a veteran and you own a house right now and you're advertising someone to assume your loan with your low interest rate and they're not a veteran, what that means is that if they're not a veteran, the substitution of entitlement will not be there because they won't have any entitlement, meaning the entitlement that the present owner has is going to be tied to that house. Now, the risk that comes to the veteran is that if the person defaults, meaning they foreclose on the house, that entitlement is going to be lost by the veteran permanently. Like, it will not be restored. It can never be restored because it's essentially a foreclosure on the veteran. So if you're advertising an assumption, make sure that a veteran is doing a swap of entitlement to assume that VA loan and that interest rate, because that way the current owner of the home is going to be off the hook and have full entitlement to purchase another home in the future. So super important to know that caveat. If you're a current homeowner and you're saying, hey, you can assume my VA loan, if you're a veteran, just know the difference, please, because it's super important to have that full entitlement to purchase future homes, because you're going to want to do that at some point. So definitely keep that in mind. That's kind of a risk that some people just aren't aware of. So I want to get the word out there about that. Make sure that a veteran is assuming the property and that the entitlement is going to be swapped, and then you should be good to go without any risk on the current homeowner. So hope that helps. My name is Jason Turner out of DC in Maryland. And if you have any questions, please drop me a comment. And of course, follow me on Instagram, TikTok, YouTube, Facebook, wherever you can find me. Please drop a comment if you have any questions.